that, especially given that we've seen an improvement in the global business outlook?
Well, the view of spreads versus defaults is very different. Now, we think of defaults as really the underlying mechanics, the underlying economics of credit quality and companies. Spreads are affected by many different things in addition to the fundamentals, liquidity, overall appetite for risk, which bounces up and down, short-term fears and short-term events before they're fully absorbed into things. So I think what this is telling us is that longer term, through the 12-month time frame, the fundamentals look much better than all the technical effects that can impact spreads in the near term. So things like liquidity and also things like central bank actions are definitely going to affect the near-term view.
So keep an eye on Janet Yellen. But we've seen a bigger improvement in the outlook for high yield as opposed to investment grade debt.
Yes.
And does that mean we're going to see a real stampede into junk bonds?
Well, we have seen already, a lot of flow into the leveraged loan sector. There's been a lot of capital going in there, mostly still searching for yield. A lot of investors in fixed income who would normally be looking for other types of instruments, can't find anything else, and that's why that sector has been so popular, and looks like it will continue to be so in the near term.
One surprise from your survey, and that was the investment grade outlook in Europe. That actually was positive last quarter, but now it went negative. This at a time when Wall Street's saying, "Hey, it looks as though Europe may have bottomed out." What's behind that?
I have to confess that was a little puzzling to me. It's a little bit of an outlier relative to the other results and to other news that we've heard. I don't have a good explanation other than that when we do these surveys, we're trying to get the consensus view. And even though it's slightly negative, it's still fairly close to zero. So just a couple more people thought things were negative than positive. But I don't have a good explanation for that because it actually does not line up well against all the recent news we heard in the last couple of weeks.
Yeah, it certainly doesn't correspond. At the same time, I guess the high yield, they're actually sort of positive about.
Well, that's a little bit clear. When you see reports about the weaker countries, Ireland, industrial production in Ireland was up significantly. All those things, the weaker areas seem to be looking a little bit better.